Hey, it's Henry, and my portfolio just hit $2 million again after I've been making many withdrawals. I'm very excited to talk about my strategies today, what I've been doing in the market, what I see happening for 2024, the positions I'm holding. Let's just dive right in. I respect your time. So first of all, I have a lot of Apple in this portfolio. I have two portfolios. This portfolio specifically, I am focused on concentrating my efforts on Apple because I don't want to have too many positions. I like being concentrated on something I really believe in and have a high conviction in. I've done this before with Tesla. I've done this before with other stocks. And now my stock of choice is Apple. Apple has a good volatility, not super high, not super low, but I've been really enjoying the options. So you can see right here that I've sold some put options. I'm trying to basically get into Apple. Oh, the market just opened up, so I'm making this 9:30 a.m. So there was an interesting spike right there. You know, for Apple, I want to acquire more shares. I want a dollar cost average. Dollar cost averaging is truly the best strategy that you can implement in your portfolio. So for me, Apple, I have a 175 put, but I also have other Apple positions. So right now I also have an Apple covered call. Now this is something I call the covered strangle strategy. You can look up Invest with Henry covered strangle. That just means I'm both selling puts and covered calls at the same time. And that's because I want to collect some premium for the put options. And I also want to collect some premium on the call options. I want to collect premium on both sides. If it comes down, that's fine. I'm gonna acquire more shares. I'm gonna get a sign and cool, good for me. I'm acquiring more stock. Now, if the stock goes up, that's also fine because my put option will expire. As you can see, it's already made 68%. This is gonna make some more money. And this covered call right here is also still gonna make more money unless Apple goes beyond 182.5. Now look, it's kind of confusing for some folks that they think a covered call, once it goes into the money, that's a bad thing. It is not a bad thing. Once you get into a position, if you determine that you're happy to sell, the stock, let's say Apple or whatever, at that price, like 182.5, I'm happy with it. There's absolutely nothing wrong with then me running this strategy. Now I do have quite a lot of options, so let's go down the list and I'll tell you why I have these options and what I'm doing with them, okay? And I might even make a trade right now. Actually, in fact, I will make a rolling trade right now, so you're gonna learn a lot in this video. Make sure you stick to the end. Marriott, I live in Marriott's all across the world, so that's why I started to decide to sell a little bit of put options in Marriott. This is gonna expire. Worthless here pretty soon, so that's good. For NVIDIA, I got this play from OptionsFi. I've done this trade a few times, just basically every single week for the past 3 weeks. Again, I'll link that in the description. It's just a software that I like to use and I get some recommendations from it. And sometimes I like the recommendations, sometimes I adjust them, right? So I'm never blankly copying anyone or any software. I'm always relying on myself, being independent with my thinking. So for me, I really like the play though. I went for NVIDIA 1120, 1130. So that means that I don't think NVIDIA is gonna go past this price. I don't think NVIDIA is gonna go past this price because it's already pretty high. Like if we take a look at NVIDIA stock right now, yeah, it's always kind of jumping up here, but for me, I don't think it's gonna be above 1120. And also you can see here that I have another position at 1030. This may happen, but we will see, okay? So for me, what I like to do is I don't like to touch my options until they're in the money. Once they are in the money, then I may decide to roll that position and save myself, okay? But at this time, happy with this position. Snapchat, I think that Snapchat's a good valuation ever since it came down a bit. I started selling some 11 puts. I made this play in my Discord, and a lot of us are making this small account strategy right here, selling puts on Snapchat. Next, I was taking a look at Tesla. I just think it's pretty low right now, so I ended up selling some put credit spreads. That's doing pretty good. American Airlines has been one of my most consistent plays ever. If you take a look at the American Airlines chart, it's like a zigzag, just up, down, up, down, up, down, and that's really good. That means that it's never really falling down or going up too much. It's perfect for the wheel strategy. Now, Starbucks is a poor man's covered call, so it just looks like a naked call right here, but it's not. It's a poor man's covered call. And right now it's showing a $50 gain here and a negative $14.95, but I have had a previous call option that has made me, I think it was about $2,000. So I'm up on this position despite currently it seems like I am down. I'm up, very slightly about $500 when we account for this $1,500 loss and a $2,000 gain. I think it might have even been a $2,800 gain. So I'm up maybe $1,300 or so. Now, this NVIDIA call credit spread is currently down because NVIDIA is going up. So when NVIDIA goes up, a call credit spread is, betting that it's not going to go past this price. And because it's getting closer, it's showing me a current loss. It's not in the money. There's nothing to worry about. But if it does go in the money, I will consider closing this position. Next, Palantir. I like Palantir a lot. So I have 30 contracts, which is a decent amount of Palantir. I think Palantir has a lot of innovation. I think the company has a lot of just bright stuff in their future. I like their management. I like the CEO. I just like what they're doing. I like that it's an AI play. And I do like the valuation. I think that this is going to be a good company in the future. It could potentially reach $50 per share in the next 12 months, okay? So next is two retail plays. I think that the rich are getting richer, the poor are getting poorer. So people are going to keep shopping for retail goods. And if you take a look at the minimum wage, as the minimum wage goes up, it doesn't matter. These companies don't care. It's actually beneficial for Walmart and Target because local stores, as wages go up, they have to close. And then these big giants, they just buy up their competition. So we've seen that over and over, even with regional banks. Like you take a look at Chase and Jamie Dimon. He was just basically, as minimum wages went up, local banks went out of business and Chase ended up buying some. So yeah, don't think for a second that, all this stuff in the politics and social media is saying, oh, wages are going up, these companies are going to be hurting. They're not. They're going to do just fine. Trust me. Target, Walmart, both good plays. I have quite a bit of both. The thing is with Target, I do need to roll the position because not necessarily that I'm at a loss because I have a $33,000 gain, but I have an $18,000 loss because of the covered call. So what I would need to do here is because I don't want to lose the shares. If I do lose the shares, I have to pay some taxes and I don't want to do that. So instead, I'm going to roll this position out for the future. It's expiring in about a month. I'm probably going to be rolling this a little bit early, but just for example purposes, I'm going to actually execute this trade because I want to show you how to roll an option and like how I think about this. So currently the stock is down just a little bit at $169 per share. So here's what I'm going to do. I'm going to go to roll this position. If you're using a different brokerage, doesn't really matter. I'm going to go roll this position and I'm going to roll it from 419 into the future. So I'm going to go from 419. I'm going to roll it to, let's say, I don't mind going a little bit further out. So August. Okay. So I want to roll from 130 and I want to make some more money. Very simply. Okay. If you go from 130 to 140, you are moving up. Oops, let me do that one more time. You're gonna roll up to 140, okay? So 130 to 140, you're gonna move up by $10. And right here, you can see the total debit is 7. I'm paying $7 to make 10. Pretty good, not bad. That's about almost a 50% return. So I'm gonna click continue and I'm going to roll all 7 of my contracts, okay? I'm gonna go for $7 and hopefully this gets filled. You can see right here that the chance of getting filled is, low to medium. So I might even go 7.05 just to increase my chance a little bit and review this order. All right, so I placed the order and I immediately got filled. So it got filled immediately. So now my strike price went from 130 to 140. And if I refresh my screen right here, that is going to be good because now I'm at a lower risk of getting assigned. And now I have a longer expiration date. So I have less to worry about. I'm already up a little bit of money. And now I don't have to risk this total return right here. Not that I'm risking it, but I don't have to sell the stock and then pay taxes immediately on it. So that's what I like to do. I like to roll the position into the future many times as I need to. And that's actually how I build up my account. Slow and steady, just keeps going up as I keep rolling up, giving it more time. And the biggest factor, guys, is time. If you're not making mistakes and you're being diligent about your investments, diversified, right? Risk management, all that good stuff. I have a risk management video coming up very, very soon. So make sure you're subscribed so you can get the notification for that. Hit that notification bell. You will see that slow and steady and time is the most important factor. So I have Apple, I have Amazon, Palantir, Target, and Walmart. I have a very concentrated portfolio of just 5 positions at the moment, some different options. Obviously I have a second portfolio as well. And I'm always scanning for stocks. Like I love Google. Google's in my other portfolio right now. And I was underperforming the market for some time in January. And now I'm overperforming the market outperforming because I have Google and Apple. My top 2 plays and these 2 stocks are holding up very well in the market. All right, taking a look at any other positions, I'm always looking for companies that, just take a look at my different watch lists here. And I'm not necessarily bullish on all these. Some of these stocks I'm actually bearish on. I just have it on my watch list, taking a look at them. Take-Two Interactive is a good gaming company. SG is Sweetgreens. HIMS is pretty good. That stock went from like $10 to $16. Alibaba I have not had. I haven't had any China exposure. I've not had NIO. I have not had BABA. I have not had any China exposure for some time. I'm just waiting for that dust to settle there a little bit. And then maybe I'll get into China. But right now I have 0 China exposure. So I was a fan of NIO. Currently I am not. But as it approaches $5, I may be looking to sell some put options and, potentially get into the stock because getting into a stock at a good price, even if it's a little bit shaky, is still a wise idea if you're using proper risk management. Let's say I put in 3% of my portfolio up to 5% of my portfolio. That could be okay, all right? In my other portfolio, I have some Adobe shares after the pullback. So I waited for earnings to happen. And after they happen, I ended up selling some put options, which was a large account position. Now, I've also made some bull call spread plays on Coinbase. I've made a lot of money, but I've also honestly left some money on the table. I did not expect it to go up this high. I did know that Coinbase will go up, but I had a very short-term play. If I look at my history here, here, I had a call debit spread where, yeah, I had a buy, let's see, I had a sell 148, 160. So this is actually call debit spread. So it's a little bit weird though, because it says sell coin at 148. I guess I was potentially closing this position. Let's go to show more. I ended up doing on February 12th, I ended up buying the 148 and then I sold the 160. So, oh, I see what happened here. So I actually ended up buying 25 contracts and I took some profits here, okay? So what ended up happening was I had 25 contracts. I actually made, in total I made, what is that? $12 times 25 roughly. So I made like, I think the total return here had a potential of about $30,000. So I took $10,000 to almost 30, but I did cut the position a little bit short here on 10 contracts. And then I let 15 more ride completely. So, you know, can't do the math in my head on the spot right now, but I took 10K up to around $25,000. So you can see here how I bought each contract here. So I had a limit price of $415, then I ended up selling for $555 short term. So that was a 20% gain on 10 contracts, and the rest were a much bigger gain because I just let them expire. So on 216, I just let it expire completely. And that's why you see just 25 contracts purchased here, 10 contracts sold, and then 15 I just let go, and Robinhood itself actually just ended up closing out the position for a big gain. I don't know why it's not here in my history though. You can see how it's missing the history. It just says 25 bought, 10 sold, and then 15 here, or who knows where, but I definitely know I made money there. So yeah, Coinbase, I didn't expect to go up that much, but it's been a very successful play. For me, another successful smaller account strategy is just simply using the poor man's covered call strategy on something like Starbucks, a very stable, call credit spreads, which I got from OptionsFi and NVIDIA. Apple, I would just run the wheel strategy, which is a majority of my portfolio right now. This portfolio specifically is in Apple. We hit over $2 million. Let's keep it going. I'm going to keep making videos for you, and stay safe out there. Make sure that you're being smart with your investments, growing steadily, going for that safe passive income. Don't go for home runs. Don't overstretch yourself and do stupid things. Please learn so you can have steady results and you can be successful with this. I really want a successful community. If you need anything, drop a comment down below. I do read the comments and I'll make sure to answer them. Hit that subscribe button with notifications on, and I will make more videos for you. I'll see you in the next one.